What's going on, everybody? Tiger here. You should be watching this video on Sunday. It is Saturday, about 5:30 p.m. Central Standard Time as I'm recording this. So I thought I'd give you guys a little bit of a sneak peek to watch on Sunday before the Super Bowl at in the evening, 5:30 p.m. Central Standard Time. This way we can get a quick look at the currencies and the assets of choice that we are looking to trade this upcoming week. So I thought we would just kind of go over a quick little look at the indices first. When I say indices, I'm referring to the currency indices, okay? The currency indices. So the Dixie for the dollar, the AXI, the BIXI, the KEXI, okay? Australia, Great Britain, Canada, the XE, the JEXI, the SEXI, and the ZEXI. Okay? Eurozone, Japan, Switzerland, and New Zealand. So we'll just take a quick look at these. One of the main things to note right off the top is the fact that when it comes to the Dixie, and this is a weekly chart, by the way, so just pay attention to the very last candle on each of these currencies, which in this case would be here. I'm just going to get rid of my drawings for a minute. And you'll see that the dollar and the Aussie dollar were the only two currencies that actually had a pretty decent bounce up, okay? Not a gigantic bounce up, but a bounce up nevertheless. The Dixie had a bounce up after the last week's candle that gave us a nice wick underneath, as you can see here. Okay? So that's a very strong rejection candle, rejecting the bottom. And it's not really a big surprise that we had that rejection candle last week, because if I turn on my drawings, guys, if you look, you'll see that we dropped into a daily demand zone last week, and then we rejected that, all the while being inside of a higher time frame demand zone. This is a monthly demand zone. Okay, if we were to go all the way back over here, go back to a monthly chart real quick, you guys will see that we did have this indecision candle, this green indecision candle right here, which was a pretty good spot, a pretty good level of demand. Okay, demand. We had a nice push away from that point, a nice gap up. So there is your monthly demand. It just so happened we actually had two daily demand zones go through this monthly demand zone. It just had blown through the previous one. It blew. I can't talk. It blew through the demand zone that was a little higher up, but it did catch the bid here on this one. As you can see, it's touched a couple times, 3 times counting this past week. So yeah, not really a big surprise to see that we did have a nice rejection up. How high can this go? Well, guys, supply and demand zones, the higher time frame supply and demand zones kind of act as a paddleboard in a game of ping pong, if you just kind of think about it that way. So price likes ping ponging between higher levels of supply and demand. So if I'm looking at the next daily supply zone up, it's going to be right here. It's going to be this green indecision candle that we see here. Okay, that's where I wrap my rectangle around. Anytime you guys see a yellow rectangle, it's usually a daily zone, a daily demand or a supply zone. If you see a green, it's 4 hour or below. If you see for demand, by the way, and if you see a red, it's 4 hour or below for supply zones. Okay? When it comes to the weekly and the monthly, I usually just color those orange, just to try to keep my items on here color coordinated. So that's just the way it looks best in my eyes, and I go with it. It just kind of clarifies things whenever I go and look and I start seeing rectangles everywhere. And I can just instantly know, oh, hey, that's a weekly zone, or oh, hey, that's a 4 hour or lower zone. Okay, the noise, right? So obviously the stronger ones are going to be your yellow and your orange. The monthly, the weekly, the daily. That's your strongest zones. So yeah, prices just tend to ping pong back and forth between those zones. So coming off of this daily demand zone down here, my expectation would be that we ping pong up to the next zone, and that will be up here. This is also going to be the origin of this strong move down that you see here. That's my new curve analysis for this period. This is my impulse candle, my impulse movement. Impulse movements always break structures. In this case, we broke this swing low point right here. Okay, so that tells me this is a pretty strong down leg. But then it bounces into a daily demand, right? So again, it's just ping pong. So if you ask me, I would assume that somehow, some way, we'd get back up to that demand zone and possibly get a rejection downwards. So that's just a quick look at the technical side of this particular currency index, the Dixie, the dollar index. And then taking a look at the AXI, which is the Australian dollar index, you'll see that, again, we did have a slight bump up for the week, just like the dollar. I think they were both around a 0.5% increase. So nothing too crazy, but it is a gain nevertheless. I personally was actually in an Aussie dollar long position that I got in last Sunday, shortly after the market opened here in the States, here in the Americas, when the markets open. And all the while knowing that prior to me buying into that zone, what did it do? It had bounced into a higher level, a higher time frame supply zone. Okay, so I knew that going into buying into this trade, but just wanted to see if we could maybe kind of overcome that. We did have the Australian rate statement come out. They did raise their rates by 25 basis points. It was the first time in 2 years that Australia had done that. So I felt pretty good about that. On Sunday, looking into that, I did observe that, I saw that from the economic calendar. So here's Sunday the 1st. That's where I got into my trade. Monday the 2nd is when the Australia, the Reserve Bank of Australia, okay, they did increase the rates. So before I even knew that that was going to be the actual number, I just assumed. I said, okay, look at this. If they're projecting to increase rates, then I'd like to try to take advantage of that just ahead of that release. So Aussie dollar dropped right into a nice demand zone, and I took a buy off of that. So felt pretty good about it. Long story short, if I go back over here to the Australia dollar pair real quick, I'll just take a quick look and show you. I had observed the fact that at the time we had bounced into this red indecision candle, which I looked at as a daily demand zone. Again, this is a daily chart. Okay, so at one point I had this rectangle drawn up just like this. Okay, now again, this would have been a yellow bar that I had at one time, or a rectangle, and I ended up buying into this trade right here inside of this daily demand zone, which, oh, by the way, just so happened to coincide with one of my blue dash lines I like to put up whenever I'm looking at former support and resistance lines. If I scroll all the way back and to the left, go into a daily chart, then you'll see we had a very strong resistance point up here. And it just so happened that it was going right through that daily demand zone. So as always, I try to find daily and 4-hour zone confluence. So if we go down to a 4-hour, I was observing the fact that we had a 4-hour demand zone right here inside of the daily zone. Okay, so that's the color green that I colored for 4-hour and below. So right in this area is where I bought into this trade, and it got a nice bounce. It got a nice bounce up. Now, if I drop to a 1-hour time frame, you'll see that I started to run into trouble on this thing because of these supply zones. I knew that we had a couple supply zones coming up here, and I'm just going to color it in real quick so you can see. Looking at this supply right here, and this is the one that actually grabbed it and pushed the trade back down against me. Okay, so and then there was another supply zone up here, which I was honestly a little more worried about because it had such a strong drop with a lot of with a big expanded range candle on the volume spread analysis. Now, we don't have centralized volume in the currency world, so we kind of have to play around with things and cheat this. I don't want to say cheat the system, but play the system or whatever. But anyway, VSA, volume spread analysis, it basically shows you the amount of trading activity that happens in any one given candle, regardless of what your time frame is. So anyway, guys, yeah, we bounced into that supply zone, and it ended up being strong enough to push price down. Now, I had started with a stop loss down here underneath the confluence of the daily and the 4-hour demand zones. Okay, so as we started to push up, then I started to trail my stop loss at one point to break even to take away the risk. That's always goal number one. I want to take away the risk as soon as I possibly can without choking it out. Okay, I still have to give it breathing room so it has a chance to wiggle around and then hopefully eventually take off. So anyway, had the stop loss there. I ended up moving it up to this point at one point because we formed a new 1-hour demand zone in the wake of bouncing into this confluence, right? So this was my line in the sand at the time. Ordinarily, I would have probably moved it up here under this wick here, but I wanted to keep it a little lower so that I could have a chance of at least this 1-hour demand catching a bid and pushing price back in my favor. And as you can see, it clearly didn't. It did stop me out for a small winner. I think it was like 20 pips. Okay. It started out as a nice trade, obviously, unrealized, but I don't want to just, for me, I'm kind of like, I kind of like to go for the home runs. I don't like to just limit myself to 2-to-1, 3-to-1 rewards. Okay. And that's just my risk tolerance. I would say if you're a brand new trader, it's probably a good idea to just set a stop or take profit under a supply zone like this if you're trying to buy or swing high or whatever the case is. But me, I've been around. I was just trying to get, go for a bit bigger win. But nevertheless, small profit, no big deal. And then, yeah, that was it. So Aussie is still a pretty strong, pretty strong currency at the moment. If we take a quick look over here at, oh, by the way, that's the put to call ratio. We'll look at that in a second. But if we go down to the surprise index, we'll take a look here and you'll see these currencies over here are showing you which ones are strongest to weakest regarding fundamental analysis. Okay? In other words, the high impact economic calendar releases, whether that's Forex Factory or any of these other ones. Okay? There's a whole bunch of different places with eco calendars. I like Forex Factory because it kind of simplifies things. If you go to some calendars, one of these might have 2, 3, 4 subfolder or subcategories on it. It just gets to be a little overwhelming. So just give me the simplified version, and that's why I like the Forex Factory. But anyway, taking a look at the strength of these currencies, you'll see right off the top of the major currencies, the 8 majors, the Kiwi is actually the strongest right now. Okay, and remember, the fundamental analysis is exactly what they talk about on CNBC, on Bloomberg, on all these high, legacy financial news outlets, right? So it's the most important thing. They don't care about our 5-minute and our 15-minute chart patterns. They don't. They care about, is the inflation going one way or another? How's employment data doing? How's our growth numbers doing? Are they increasing? Are they decreasing? Are they meeting expectations? Coming in hot or coming in cold, right? The economists are the ones that predict all this stuff. And then I like to take a look at all of it as a whole. So when you add it all up, okay, exceeding expectations, the Kiwi is exceeding expectations on 71.5% of those high impact reports. So it is currently the number one. South African Rand is obviously leading the path, but I don't trade it. And I don't trade the Chinese yuan either. But I'm just looking at the 8 majors. The Kiwi and the Euro and the Aussie are 1, 2, and 3 right now. If you look at the weak currencies, it's actually the Japanese yen and the Swiss franc. Okay? You got the Turkish lira there as well, but again, I don't trade it. But your safe havens, okay, that's your safe haven currencies right there, trailing the way in the realm of fundamental analysis. Okay, the most important component of this. Now we do have sentiment analysis as well. In other words, looking at the relationship between smart money and dumb money. Okay, but that's a whole analysis group all on its own. But fundamental analysis, guys, this is it right here. This is the strength of the currencies: Kiwi, Euro, Aussie, and that's part of the reason that I took a trade on that Aussie dollar, because I knew that we had a strong reading. It was actually a stronger reading whenever I got into it. I do believe it was in the 80 percentile at one point. Australia, where you at? Yeah, at one point I think it was. But anyway, taking a look at the economic calendar. Now this is this week that we just finished up. Okay, there's the Aussie rate that I was just talking about, and then we also had 2 other rate statements that came out. We did have the British pound that came out to announce that they were keeping their rates the same, but this was a little bit on the dovish side. So it was a hold, but it was pretty dovish of a hold partly because they had 4 of their 9 governors ready to drop rates by 25 points right away. So that's pretty much a split vote, guys. But the ones that did vote to keep it the same just barely edged out the doves rather, to drop the rates to the 25 points. So as a result, yeah, they kept rates the same, but it's a pretty dovish look, pretty dovish tilt. And then you go over here to the Eurozone, and they did the same thing. They kept their rates the same. I didn't think there was a big split on that from what I noticed. Yeah, they basically said they were in a pretty good place with theirs, low unemployment, solid balance sheets, shrugged off some disinflation, inflation concerns, etc. All the normal yap, the yippity yap. So yeah, two of the three rate statements remain the same. The only outlier was Aussie increasing by 25 basis points. Again, for the first time in 2 years for them. So looking for continued Aussie dollar strength as far as I'm concerned. Okay, you got the hawkish, the hawkish raise plus the fact that it's exceeding expectations on most of its reports. So yeah, that's it. As far as the dollar goes, it did not really have the U.S. dollar rather did not really have, I don't think, the greatest week. I mean, you had over here 3 of the reports on the job side that were missing expectations, so quite bearish on that. But you did have some positive readings on the services and the manufacturing sectors of the PMI data. Okay, these are all within the last 7 calendar days. If you see a yellow color font over here, obviously if it's white, then it's older than the 7 days. So yeah, a little bit of mixed results overall. But the dollar is overall still pretty decent. I think it's hanging out in the 60% percentile. So dollar looking good. It's looking good from a technical standpoint as well. Again, we just looked at the Dixie over here, observing the fact that it did go up, pretty decent this week. I mean, we started off down here was our Friday candle, right? That big one there. And that candle was as a result of what? As a result, big time because of the fact that Kevin Warsh was nominated by President Trump as the new Fed chair. And he's seen to be, basically not, how do I put it? A lot of people thought he was going to be a pushover. In other words, do everything exactly like what Trump says. But he does seem a little bit more independent, let's just put it that way. So anyway, all that matters is the market looked at it as a good thing. Okay, so look pretty good. So stronger on the dollar from the reaction, and it just carried into this week. All the other currencies, like I said, the XE was down, the Swiss franc was down, okay? New Zealand. Okay? New Zealand was down as well. So basically, like I said, it was just the Dixie and the Aussie was the only ones that had gains this week. I think the Swiss franc too. So it was also down. But anyway, what are we looking at this week? How does all this change for the week? Well, one thing I like to do every single weekend is go study the COT report, the commitment of traders, and see what the big banks on Wall Street, okay, the hedge funds, everybody the smart money. I want to see where they position themselves, which specific assets, which specific currencies, got net change longs, net change shorts. So we look at that, look at the very top, and you'll see silver. Silver actually had a positive net change of 6%. So that's quite strong. That's a really strong number. As far as currency, the currency world, the Canada dollar had the highest increase at almost 5.5%. Okay? So always look at this and think, okay, what are their long contracts or short contracts? Okay, remember, this is the options market. Right? So what this is saying is big banks and institutions got rid of 4,500 long contracts, which is a bearish move. Okay, they did get rid of 6,700 shorts as well, but when you do the math and you reconfigure everything, guys, they had a 6% net change to the bullish side. So going into this week, silver could potentially get some bumps up. Now, we don't really have it as a bullish signal. Don't even have it as a neutral signal. I think it's pretty well a bearish signal. So it's too mixed of a signal for me to get excited about trading silver. Okay? Because, the banks increased it, but this is not the end-all be-all. As much as I love this report, I want to follow all the fundamental data, sentiment data as a whole. And when you look at it as a whole, okay, over here, it's not given a very strong signal either way. If we go to the neutral territory, you'll see, let's see here, where are you at, silver? Yeah, right here. Okay, this is a -1. -1. So yeah, we're getting, we're getting some negative scores on the technicals. We are getting some positive scores on the sentiment, which of course is coming from that COT reading we just looked at. But then we're getting nothing out of the fundamental world. Okay, so it's not really giving us a strong signal. It's a -1. Anytime you see a +4 to -4, kind of that 8-point range, it's just too neutral. It's not giving a strong enough signal. So when it comes to top setups, I only care about the 5s are higher or the -5s are lower. And when we look at all the data, the technicals, the sentiment, the growth numbers, the inflation and employment numbers, guys, okay, we want to look and see, especially when it comes to currencies, which currency has more of these in its favor on the bullish side, and which currency is matched with it that has more of these items on the bearish side. So when you look at it from that perspective, right now we're stuck with the Kiwi yen at the top. Okay, Kiwi yen at the top, Kiwi Canada dollar, number 2, Aussie yen, CAD yen. So really kind of the common denominator on this is by the Kiwi, which we know because we just observed that it was the strongest currency, exceeding expectations on 71% of its high impact events, right? So the Kiwi is strong. Kiwi's quite strong. Euro and Aussie as well. Okay? There's a couple Aussie pairs on here. Aussie yen, Aussie Swiss. If that's a strong currency, then why is it on here? Well, partly because it's strong, but also look at what it's paired with, matched with. The Japanese yen and the Swiss franc. Okay? Remember, those were the number 1 and number 2 most bearish currencies. Okay, the safe havens. Safe havens aren't looking the greatest at the moment when you match it up against some of these strong currencies. So it's no surprise at all to see those specific pairs on there. Aussie yen, Aussie CAD. Okay, Kiwi strength, and then if we flip it around to where the Kiwi is the quote currency, okay, we got a couple Kiwi currencies at the bottom as well as short, which means buy New Zealand and sell pound. Or down here, buy New Zealand and sell euro. See, I don't really care that much for the euro New Zealand short option because remember, the euro is the second strongest currency. It's right behind the Kiwi right now. So yeah, it's giving me the most bearish signal, but it just makes me pause a little bit. The pound, however, pound New Zealand, it's given me a 50%. So it's exceeding. It's got some mixed data, some mixed strength and weakness. So I'd be okay with selling that. I'd be okay with short selling the British pound, New Zealand dollar. What else we got? Well, we got we got the Nasdaq on the bearish list, guys. And this has happened a few times over the last, I don't know, week or so. We've actually had some of the U.S. indices on here to sell. But I don't know if I want to be selling any of those. The NASDAQ, the S&P, the Dow. Okay. I don't know if I'd want to sell that. Those things over time have been strong, have they not? You go look at a monthly chart of any of those. Monthly chart. Okay, let's go down here real quick. Monthly, where are you at? There we go. S&P right here. Monthly chart. Do we have, is this giving us nothing but higher highs and higher lows? Okay, look at the bottom of the bodies. So ignore the wicks. Look at the bottom of the bodies and the top of the bodies. They keep going higher and higher. So if we start to, at some point, Trader Nick talks about this all the time. He's so right. If we start getting a close below some of these wicks, okay, at some point, yeah, it could roll over and go down. But I don't want to be shorting into that when it's just a parabolic move straight up. Same thing with the well, NASDAQ's a little bit different of a story. And the NASDAQ's actually been a little bit more on the sideways move of late. But when you look at the Dow right here, okay, look how strong that is. How are you trying to sell into that? Okay, that's just as strong gets. Okay. And while we're over here, let's take a look at a couple other gold and silver. Okay, same thing. Gold, higher highs, higher lows. Silver, okay, it's right in the middle. Right in the middle. And again, if we start closing below this last month's candle, in other words, the January candle, okay, maybe the bears might have a little bit of a field day, but I'm not trying to short into that. F that. They can have it. They can have it. What about Bitcoin? Has Bitcoin not been a bloodbath lately? Bitcoin, Ethereum, Litecoin, okay, all the coins. You get a coin, you get a coin, and you get a coin. Okay, it's been a bloodbath. This is your monthly chart on Bitcoin. Okay, we broke this structure down here. So it's going to be interesting to see if we, when February ends, it's going to be quite interesting to see if we close below this point right here. Because that's this wick over here from April. Okay, Liberation Day. Does that ring a bell, anybody? Okay, this is the liberation month, okay, April. Look at that. We are currently below Liberation Day prices. Touched all the way down at 60,000. And remember, just a handful of months ago, we were at 120-something thousand. What was that? 126,300 basically. Is that a 50% drop? That's insane, guys. That is unbelievable. But if I turn my drawings on, you'll see that we have dropped into a monthly demand zone on Bitcoin. And we drop to a weekly. You see, we have a weekly indecision candle as well. So that's a weekly demand zone. See that? Let me turn my drawings off. Indecision candle with a gap above it. Now, as you see, we got a yellow one inside. What's yellow? Daily, right? Go take a look at that real quick. Okay, just keep this stuff in mind. Confluences are strong. So we started off with a monthly demand zone. Inside, we have a weekly demand zone. And now we have a daily demand zone inside of all that. That's strong, guys. That's strong. I'm not saying it's going to hit this and then fly back up to 120,000. But what has happened? Hey, here's our daily. Did we get a bounce? Did we get a lot of VSA volume start to jump in? A lot of trading activity? We did. Now, what could be the saving grace of the bears? Hey, the fact that we did kind of bounce into a supply, a daily supply. A daily supply, you had a 4-hour below it, and that 4 hour is the one that's trying to beat it back down. So what's going to win out? Who's going to win out? Who would you want to place money on? Would you want to place money on one daily supply, one 4-hour supply? Or would you take your chances on a monthly, a weekly, and a daily supply that all met the same spot? Okay. Like that. I don't know. Just saying. I'm not going to put any money on Bitcoin. Now, one cool thing about Bitcoin, just so you know, if we go to the put to call ratio, I did observe that, look at this. Bitcoin is got a ton of high put volume going on. Okay, in the options market. What does that mean? It means a lot of bearish bets. Okay, so if they're putting a lot of bearish bets on, this is a contrarian signal potential. Now, this is one item. It's not the end all be all. Just like the COT is not the end all be all. Just like the PMI data is not the end all be all. Okay? The inflation decision, the non-farm payroll, which by the way is coming up on Wednesday. It was delayed. It was supposed to be yesterday on Friday, but it's actually been delayed till Wednesday due to the partial government shutdown. So keep that in mind. We do have those numbers coming out on Wednesday. They usually have it on Fridays, so it's going to be interesting having it midweek this coming week. But at least we finally get it. Okay, it's an account killer, so be careful with that on Wednesday when the NFP is released, non-farm payroll for the U.S. dollar. But yeah, this is a nice bullish signal for Bitcoin. So again, I'm not personally interested in putting any money on a Bitcoin long because it is neutral. Again, it's given us a neutral setup. It's only a neutral score of a 1. So it's straight up zero on the technicals, except for the fact that it did hit that higher time frame demand zone confluence. But the big banks, okay, the smart money, they're all positioned. They're positioned long. So this is giving us a strong bullish reason to buy. But it's just one of the 3 analysis groups, guys. Because when we look at the economic data, okay, the fundamental analysis, it's giving us the opposite. It's giving us a -2. -2, +3, 0. It's a 1, guys. That's not enough of a reason to go buy or sell this asset. So these neutrals, I try as much as I can to stay away from until they make it into my top setups on the EdgeFinder. If you have not ever heard of this EdgeFinder, guys, go to a1trading.com. I'll try to put a link in the description whenever I go to upload this video. But this is the greatest thing I've ever used. Okay. Ironically enough, I spent almost a decade focusing on remember, there's 3 analysis groups. I spent my first decade of trading focused on the one that matters the least, and that was the technicals. Okay? Supply and demand zones are strong and powerful and potent, but they work so much better when you're following the fundamentals and the overall sentiment of the market. Okay, that is just an awesome, and it's completely changed my trading around. So um, in a challenge account, okay, I did go in a whole $9,000, which sounds crazy, but as soon as I got this, everything turned around, and I started chipping away at that loss at only 0.2% risk on my trades. So it took me, a few months, but I finally got it back up to break even. So, and all that is because of this. So again, it's the Edge Finder. It's on a1trading.com. You guys can actually see me over there this week. A1 Trading. Okay, a1trading.com. This is where you find the Edge Finder right here. And then if you're a stock trader, you can find the stock box, which is right here. This is a similar thing, guys. This gives you all the technical readings, the sentiment, the financial readings for all your favorite stocks, and it just gives you a score. Okay, real simple thing. And I mentioned this on stream yesterday. The best thing to do with this Edge Finder is not to worry about trying to be an economist. Okay, you don't have to necessarily know what manufacturing purchasing managers index is right off the bat. You don't have to know what the personal consumption expenditure is. Okay, the PCE rating, which of course is the Fed's favorite gauge for watching inflation. You don't have to know all that stuff up front. But what you can do is get an Edge Finder, have a system, have something that's showing you, it's sifting through all the data points that would normally take you hours to do, and it's simplifying it just to simple numbers for you. At the end of the day, all that really matters is the score. Okay? Is it 5 or higher? Okay, buy it. Is it -5 or lower? Okay, short sell it. But just because this is telling me that these scores are the scores they are, does not say, Tiger, go out and hit the buy button. Tiger, do not go out and hit the sell button. That's not what that means. It says you still got to use the technicals to time your entry. So all that, that's the order of operations. Okay? It sounds complex, but I promise if you guys mess around with it long enough, it's second nature. It takes me 2 seconds to look at EdgeFinder and see a score, and then go see, am I trending up? Am I trending down? Is it following that fundamental score? Do I have demand zones? In other words, do I have patches of unfilled orders where banks are likely, not guaranteed, but likely to buy again to fill out the rest of their order, their accumulation, their distribution of their position, okay? and then you place the trade. So anyway, that's that. I just thought I'd take a look at maybe one or two of these, and then I'll get out of here. Let's take a look at the strongest, the Kiwi Yen. Is there a place for me to possibly buy? Let's go look. Let's go look. Let's go look. So we did form last week a brand new impulse move. Okay, it was an impulse move because what did it do? It broke a structure. See that structure there right there? We just do this. I always like to put it in little white dotted lines. And we broke a structure, and we closed, I think, just barely above it. Now, if I were to buy into this pair, I would need a discount, because if I look at the swing low and the current swing high, we're high on the curve. We're high on the curve, guys. I need a discount. So where do you find discounts? As close to the turns as possible. Okay, the origin of the strong move up. So I did identify a 4-hour demand zone. Okay, had a nice long wick underneath, and then you got 4 big green candles coming out of it that again broke a structure. So I want a retracement back to the origin of that strong move up for a possible buy, because if I'm a big bank and I started this candle, I started accumulating a position, it ran off too quick. So if price comes back, I want to be able to fill the rest of my order. Remember, the banks have much larger order sizes than you and I just sitting at home on our laptop or a smartphone. So that's your 4-hour demand, and I take the rule of 4 to heart. So whatever time frame I'm looking at, I try to go find a confluence on a lower time frame, and the simple way to do it is just divide it by 4. So 4 divided by 4 is 1. So go to 1 hour. Go down to my 1-hour time frame, and there we go. We got a very similar looking candle that's inside of the 4-hour candle. So for me, I just put a simple white line at the proximal line of that demand zone, and that's my potential spot, guys, to buy or sell this market. Now, you see I've got an alert up top here. That's because I am looking at some possible 15-minute activity up here with some moving averages. Okay, possibly we get the 200 EMA floating through this demand zone at the same time. This is more of a scalp trade. It's just kind of something newer I'm playing around with. But at the end of the day, I want to dance with the one that brought me, and that is the higher time frames. In this case, the 4-hour, the 1 hour. Okay, I like daily 4 hours the most, but you can see the closest confluence I have is a long ways away. If I have a score that is giving me a very bullish plus 10 score, then price may not want to drop all the way down here to my next, my favorite confluence, which is daily 4-hour. So I'm basically going down to the 4-hour or the 1-hour. So that's why I've kind of identified this demand zone down here. But just for kicks, like I said, I am playing around with some moving averages, some overbought and oversolds on 20 and 80, 20 and 80 on the RSI. So I won't get into that because that's, again, it's brand new. I don't want to start talking about that until I really master that. So bread and butter though is down here. If that alert hits, I'll look at it from my other, my new trading strategy. If it doesn't look good, then I'm just going to wait for a pullback to this demand zone, and we'll be looking to place a buy down here like this. So that's going to be the main goal for this particular trade on the Kiwi Yen. That is your strongest bullish reading. And just for kicks, guys, so I can finish this out and not make this video too awful long, we'll just take one look at the most bearish currency pair, which is the Euro New Zealand, and see if we got anything there. Okay, Euro New Zealand, Euro New Zealand. Okay, start off with a daily. You can see I've got a downward trend on the daily. I got lower lows, lower highs. I do have a daily supply zone right here. Let's turn everything off for a second. Turn off my drawings. Okay. See that candle, that last green candle up before a big strong move down? Okay, this is what you call a drop, base, drop. So I want to go back to the base, okay, the consolidation, and see if I can't find some smaller time frame confluence in there. So I already know that that's my daily supply zone. So let's go down to the 4-hour. Okay. And obviously the daily to the 4-hour, that's basically 7 to 4. That's not dividing by 4, but the 4-hour is as low as the 4-hour when it comes to the banks and the smart money that's looking at this stuff. 4-hour is a popular time frame with them. So the math doesn't work out from 7 to 4 on that one, but that's just the way it works. Daily 4-hour. But when you get below that, 4-hour to 1-hour, 1-hour to 15, then that's more so what I meant when I said divide by 4. So anyway, daily supply. Inside of that daily, we've got a 4-hour supply. Okay, so there's my confluence. We're right there. Basing action, strong drop. Oh, by the way, it had 1, 2, 3, 4, 5 candles, 4 candles, 4 red candles coming out of it. That's a pretty strong look. Pretty strong bearish look, guys. And I don't know why I have that white line here, but basically what I want to see is just a simple bounce in. Okay. Now it's come up close to the daily, and as you see, it's kind of started going down early. I like this. I like getting some, some manipulation, some liquidity, hunting, if you will. So let's just come back up, get a simple push in. Now here's the key: when we get a price inside, if you want a confirmation entry, and this is my favorite way to make sure that price is at least trying to break a structure, or it's at least trying to reverse and go the opposite way. So, because if you think about it, if price comes up like this, well, now we've got a smaller time frame uptrend, so a counter trend, right? Well, you have to get that in order to come into supply and demand zone. But what makes me feel pretty good about this is if I get price come in like this, I don't necessarily always just want to put a limit short in there. But if I can get price bounce into the zone, come down, go back in, and then break this structure, break this candle, this swing low, then I would look for the fact that this is my new impulse leg because it broke a structure. And oftentimes it'll create a brand new supply zone in this case on a smaller time frame. I would look for a retracement to a newly created supply zone, and that would be my trigger to short the market right here. So the idea here is break this structure. We do it with this price action here. I love this because if I just buy into, or if I just short into this, price very easily could just, chew right through, stop me out for a loss. Or price could go in my favor and I missed the trade because I didn't short here. Okay. This happens once in a while. But if I get this price action to where it at least proves that it's trying to break the structure downward, then that makes this a low risk, high reward trade. Because typically what happens if we go down to divide by 4, typically what happens is we get a new supply zone formed somewhere in this area, just like this. And that would be our spot to short the market right here. Okay? That is our spot. That is our spot right there. Trying to draw a circle. Okay? There's our entry. There's our short entry right there. Okay. This is my favorite way to get into trades. If I feel good about the trade, but maybe I just need one more little piece of, something good, something positive in order to actually pull the trigger. So try it. I don't care what type of trading strategy you have. This is a very good way to at least have price prove that it's at least trying to reverse on you, if that's what you're looking for, okay? Really awesome. I love it. But anyway, guys, that's about it. I'll save the rest for Monday morning. I'll be on at 6:30 a.m. Central Standard Time at Trade Like a Tiger on YouTube. Yeah. Have fun at the Super Bowl. Okay. We'll talk about the Super Bowl results on Monday as well. Peace.